Hello friends, in our previous lecture we have started with chapter number 4, that is reconstruction of partnership. We have seen the reasons for reconstruction and we have seen what we will learn in this chapter. Two topics, that is two new formulas, sacrifice and gain, we have learned yesterday, solved its sums. Now we are going for the next topic of this chapter, that is revaluation of assets and liabilities, which is given on page number 117. Revaluation of assets and liabilities of partnership firm and its accounting effects. That whenever we are making any changes in partnership firm, that is whenever we are changing P&L ratio, so at that time we have to bring our assets and liability to their market values instead of book values. Now what is this market value and book value? Suppose if you have purchased any asset, over many years you are writing off the depreciation and decreasing the asset, but actually its value is more or less in the market, so we have to bring that asset on its market value, and the profit or loss which we have incurred should be distributed among the partners in their old ratio, because now this old partnership is changed into new partnership. The book value of assets and liabilities recorded in the books of partnership firm when brought at present value is called revaluation of assets, underline. It means recorded assets and liabilities are shown at new value, which is called revaluation. Revaluation means its value can increase or it can decrease. Recorded assets and liabilities may be higher or at lesser than its actual or real value. It may be possible that with the passage of time, the price of fixed assets such as land, building may go up. In same manner, there not be any provision for reserve for debtors or bills receivable. In same manner, it may be possible that liabilities increase or decrease, or the liabilities remain unrecorded. Due to all these reasons, if the partners have to decide the revalue the assets and liabilities, then its accounting effects are given below. Accounting effects of revaluation of assets and liabilities. A special account is opened in the books of partnership firm to record the accounting effects of revaluation of assets and liabilities. This is called revaluation account. Underline, what is revaluation account? A special account opened in the books of partnership firm to bring the new values of assets and liabilities, that account is revaluation. Generally, whenever there is reconstruction of partnership, changes in profit and loss ratio, here we are learning assets and liabilities of the firm are revalued. So the assets and liabilities can be recorded at the real value in the firm's accounts, and there is no possibility that any partner has to suffer because of reconstruction. For the same reasons, at the time of admission of new partner in existing partnership firm or retirement of death of a partner, the existing firms and liabilities are revalued. Now we are writing about it. The next page there are given some rules, but I have made the rules very easy for you, that I am giving. Okay? So everyone will write accounting effects of revaluation of assets and liabilities of partnership firm. Now friends, as we have discussed here in these paragraphs, whenever we are revaluing, means we are taking out the new value, we can incur profit or we can incur loss. There are only two aspects, that whether we will get profit or we will incur loss. Now whenever profit and loss are incurred, what are the rules? Or if any asset is increasing, we will get profit or we will get loss. So we are giving the rules for that. Rules or aspects of profit or loss regarding revaluation. for that, in the business, there are two aspects, that is liabilities and assets. Now I have written these assets and liabilities on opposite side. The reason is that the effect of liability will be the opposite effect of assets. You know that thing. So there are three aspects on both the sides. Three each. Increase in liability, increase in asset, decrease in liability. We can write it short. Then liability can be unrecorded. UNREC means unrecorded liability and unrecorded asset. So for these 6 cases, we need to know that when we are getting profit and when we are getting loss. For these 6 aspects, we need to see that when business is getting profit or when business is getting loss. We will try to understand. Okay. If you can know any one if you know, then you can know everything. Okay. First we are talking about asset. Think about an asset. Suppose the asset name is land or building. Its current value is 4 lakhs. In our books, the value is 4 lakhs. And whenever by revaluating it or by putting them in market value, we are getting 8 lakhs for it. Or we are getting 10 lakhs. Now, value is 4 lakh, asset is increasing to 10 lakhs. So it will be profitable to us because our asset is actually 4,000, but we are getting 10 lakhs for it in the market, but we are not selling it, just we are revaluing. So this increased value of 6,000 will be our profit. So whenever any asset is increasing in business, any asset, I have given example about land for just an example. Any of the asset will increase, then we will get profit because from asset we have to receive. Assets are our receivables, liabilities are our payables. So think about that. If the value of any asset is maybe 4 lakhs, 6 lakh, 10 lakhs. Now in future its value is increasing, so we will receive more amount for it. So we will get profit. And the opposite to it will be loss. Why loss? Suppose our creditors are rupees 1 lakh. In future now we have to pay them instead of 1 lakh 50,000 because we have made the changes and actual value is 1 lakh 50,000. So we have to pay more. So whenever we have to pay more comparing to the previous value, we will incur loss. So opposite, if liability is increasing, we will incur loss. Asset is increasing, we will get profit. Opposite to it, if the asset decreases, then we will get loss, and if any liability decreases, we will get profit. Why we are getting profit when any liability is decreasing? Think about the creditors again. Current creditors are 1 lakh, but actually when we are making the changes, they are only 50,000. So we have to pay, first we have to pay 1 lakh and now we have to pay only 50,000. So our 50,000 is saved, that is our profit. So I am telling, if you know one, you can know all. Because any asset is increasing, that is our profit. So any liability is increasing, that is our loss. Any asset is decreasing, that is our loss, and any liability is increasing, that is our profit. Now unrecorded asset. Suppose we have to receive or we are having asset which is not in our books. Actually we are having asset in our business, but we have not recorded in our business. So from future we will get some value from it. So again, if any unrecorded asset is coming in the business, that is our profit. Any unrecorded liability which we have to pay in future, that will be our loss. So you can see totally opposite. If you know one thing, you can know all the things. That any asset is increasing, profit, any liabilities is increasing, that is loss. Any asset is decreasing, that is loss for us. Any liability is decreasing, that is good for us, that is profit. Any unrecorded asset is brought, that is our profit. Unrecorded liability we have to pay additional, that is our loss. So these are the aspects, or these are the rules when revaluating the assets or liabilities. This can be the aspects. Now we have to write some journal entries for it. We have to write journal entries for it. So for that we have to prepare revaluation account. Okay, revaluation account is prepared, and in the next chapters we will not have journal entries, we will only have revaluation account. But first of all, as you know, in 11th standard also, first we learn journal entry, then we post it to ledger. Okay, so for that, rules for passing a journal entry. Rules for passing a journal entry. For profit, for loss. From above aspects or above rules, we can see there are only two aspects, profit or loss. So whenever you are getting profit or whenever you are getting loss, what is the thing? Now, if you are not remembering this, or if you are not getting this point in exam, then also you can remember. How? Take the base of chapter number 2 of P&L account. In P&L account, on the debit side we have expenses and losses, on credit side we have incomes and gains. So incomes and gains is like profit, and that are credited. So in the same way, whenever we are getting profit, revaluation account is credited. And the opposite side, what will be debited? Name of asset, or name of unrecorded asset, or name of unrecorded liability, because we have three aspects for profit. Whenever we are getting profit, revaluation account is credited. Then what will be debited? Name of asset, or name of land. Suppose a land is increasing, then what is the entry? Land account debit to revaluation account. And opposite to it, whenever we are getting loss, revaluation account is debited. So profit credited, loss debited, and what? Revaluation account. So when to debit revaluation account? When any liability is increasing, when unrecorded liability is there, or any asset is decreasing. Suppose creditors are increasing, then revaluation account debit to creditors account. Okay, so this will be the end. So you have to know the rules and aspects. In the textbook directly journal entries are given, but before journal entries, if you remember this thing, then any journal entry you can write easily. Any journal entry you can write easily. Now friends, we are going to write the format of journal entries which is given in book, but we will write by ourselves. We don't have to take the help from everyone, because now we know the rules. Any asset is increasing, that is profit and credit revaluation for it. Any asset is decreasing, there is loss, debit revaluation for it. In the same way, know any this aspect. You have to know this aspect, then you have to know the rules. One more thing you write. The other name of revaluation account is profit loss adjustment account, not appropriation. Okay, appropriation account we are having in second chapter, but I am talking about this chapter. Other name of revaluation account is profit loss adjustment, not appropriation, adjustment account. Why? Because we are having the same rules as profit loss account, so the other name of revaluation account is P&L adjustment account. So in textbook, if sometimes instead of revaluation, instead of name revaluation, P&L adjustment is given, then don't get confused. P&L adjustment is the name of revaluation account. Okay. Now journal entries. Format of journal entries. According to these different cases, we will write the journal entries. Okay. Number 1, increase in asset. In our books, if asset is increasing, then first you have to remember that if asset is increasing, it is profit or loss? It is profit. So for profit, revaluation will be credited. So debit will be asset. So what will be the entry? Assets account debit to revaluation account. Entry will be simple, but for that you need the logic that if any asset is increasing, that is our profit. Profit means revaluation credit and assets will be debit. In the same way, decreasing asset. Now when the asset is decreasing, we are getting loss. For losses, revaluation will be debited, assets will be credited. First you decide that revaluation will be credited or debited. Opposite thing we can get. So revaluation account debit to assets account. No need of any narration because you are in well stand. Number 3, unrecorded asset. In book, receivables and that thing are given, that is not required. Now again you need to know that when you are having an unrecorded assets, you are again getting profit. Profit means revaluation credit and unrecorded asset will be debit. So unrecorded assets account debit to revaluation account. Number 4. Now we will write for liability. Increase in liability. Whenever any liability is increasing, we are incurring loss. For loss, revaluation will be debited. So, revaluation account debit to liability account. In the same way, decreasing liability. So opposite to it, whenever any liability decrease, we are incurring profit. Profit means revaluation credit, liability will be debit. So liability account debit to revaluation account. Number 6, unrecorded liability. Unrecorded liability. So again, whenever any liability is unrecorded, we have to additionally pay it. So we will incur loss. Loss means revaluation debit. Unrecorded liability will be credit. Revaluation account debit to unrecorded liability account. 7th one is like liability only. As you know, these provisions and reserves are a type of liability, but differently if the name is given. Suppose they are giving that provision for bad debt reserve or discount reserve is to be maintained. We have to maintain provision for bad debt reserve and discount reserve. So that is type of unrecorded liability. You have to know these things. Why unrecorded liability? Because we are creating reserve, so we are to distribute our profit. We have to cut short our profit. So for that also we are incurring loss. So it is type of unrecorded liability. So entry will be revaluation account debit to bad debt reserve account to discount reserve. Because these provisions and liability will decrease our profit, so that is unrecorded liability, so we are incurring loss, so their loss is debited and they are to be credited. Next, closing revaluation account. There can be two aspects. Profit on revaluation, loss on revaluation. Now see, if we are getting profit, revaluation is credited. Now this account is only to be closed, so opposite effect is to be given. Account is to be closed, so opposite effect is given as revaluation account debit to partners capital or current account in old ratio. Distribute this profit in old ratio. And why revaluation is debit for it? You remember P&L account. All the incomes and profits are on credit, all the expenses and losses are on debit. But still, when the total of credit side is more than debit side, the net profit will be on debit side only. For that, we have debited revaluation. This does not mean that revaluation is debited, so we are getting loss. Whenever you are closing the account, the effect will be opposite. As you know, whenever we are closing capital and current account, if the balance is on debit side, then we are not calling it as debit balance, we are calling it as credit balance. In the same way, whenever we are getting loss, revaluation will be credited here, because we have to close down the account. So for that, partners capital or current account debit to revaluation account, and we have to distribute these profits or losses in old ratio, not new ratio. Okay, so these are the format for journal entries. Maybe you have not understood this thing, no problem, we are preparing revaluation account, after that you will understand. Now based on these entries, we are preparing a revaluation account. So format of revaluation account. Now friends, one thing I may to tell you that this revaluation account we are preparing here on based of journal entries. But in upcoming chapters and in this chapter itself, without journal entries also we have to prepare revaluation account. So at that time, how you will prepare the revaluation account? For that, one thing you remember, here we are writing particulars amount, okay? Particulars amount and particulars amount. With that thing you write one more thing, losses and profits, so that you can directly understand that if journal entries are not there and we are getting profit, then they are credited, and we are getting losses, then they are directly debited. Because sometimes in question, revaluation account is only asked, journal entries are not asked. So at that time, if any asset is increasing, then that increased value of asset is credited, because whenever any asset is increasing, we are getting profit. Suppose any unrecorded liability is brought to the business, or bad debt reserve are brought, then we are to be debited, because due to that unrecorded liability or this bad debt reserve, discount reserve, we are getting loss. So losses will be debit, profit will be credit. Or now, for instance, we are posting this, then also you can understand that whenever we are posting this, then also it is same only. Posting the first entry, assets account debit to revaluation account. So revaluation is credited, we have prepared revaluation account. So on the credit side of revaluation account, we will write by assets account. And in the bracket, we will write increase, so that we can understand that assets are increasing. So we have to write here, because we are getting profit by increasing asset. Second, decreasing asset, revaluation to assets. So on the debit side of revaluation account, we will write to assets account, and in bracket we will specify decrease. So assets are decreasing, we are getting loss, so we are writing on debit side. Otherwise, according to the journal entry also it is correct. Unrecorded assets. Unrecorded assets to revaluation by unrecorded assets. Increase in liability, revaluation to liability. To liability account in bracket increase. Liability to revaluation. So on credit side by liability account in bracket decrease. Unrecorded liability, revaluation to unrecorded liability. Then provision, revaluation to both provisions. Then at last, as I said, closing the account. But before that, again I will explain that if journal entries are not there, then you just have to remember which is our profit, which is our loss. Suppose if asset is decreasing, then first you need to know it is our loss. So directly we will debit, and in bracket we will write decrease. Suppose liability is decreasing, then that is our profit. Then we will write on credit side by liability, and in bracket we will write decrease. So without the journal entry also revaluation account is possible, and with the journal entry also it is possible. Now it is the time to close the account. Suppose the credit side is more than debit side, then remember our final accounts only. If the credit side is more than debit side, the balance will be on debit side. To profit A, B, and the ratio will be old ratio. Or else you can write in this way so that it will be easy. To partners, capital or current account. In bracket write profit. Partners, capital or current account, in bracket write profit. Here also. By partners, capital oblique current account, and in bracket write loss A, B. So these are the formats of journal entries and the format of revaluation account. Now let's do one sum so that you can get the thing what I have explained. Okay? So rubbing this thing, and we are going for a sum so that you may understand that what will come in our sum. And in exam also same thing will be asked. We will be asked 5 or 6 journal entries, and we will be asked to prepare a revaluation account which will carry 3 marks. Okay? Yes. In exercise there are sums where we have to prepare balance sheet also, but such sums are not expected in exams. Okay? That is just for learning the next chapter. For learning the next chapter, base is given in 4th chapter. Okay? Yeah. Let's do one sum on page number 139. 10 sum. Rajesh, Pushpa and Pratibha are partners of Srinath G Traders of a partnership firm. Their profit and loss sharing ratio is 2:3:1. So remember, we need all ratio to distribute the profit, that is 2:3:1. Their firm's balance sheet on 31/3/17 is as follows: capital Rajesh, Pushpa, Pratibha. Non-current liabilities is having bank loan. Current liabilities creditors, bills payable. Workers profit sharing fund, outstanding expense. Non-current assets are land, building, machinery, investment. Current assets are debtors, bills receivables, closing stock, bank balance, cash balance, incomes, receivables. As on above date of balance sheet, partners decide to change their profit and loss sharing ratio to 1:1:1. So the new ratio is 1:1:1. On this date, they have decided to reevaluate the assets and liability, for which information is as under. The value of land is to be increased up to 2,50,000. Now friends, land is to be increased, and we have to write only the increased value, only the difference value. So what they are telling, please read again, value of land is to be increased up to 250. So the previous value of land, if you are seeing in the balance sheet, it is 1,80,000 and the new value is 2,50,000. They are not telling that you increase the land by 2,50,000. They are telling that the current value of land is 1,80,000. It should be increased up to 2,50,000. So the remaining amount will be our profit or will be our loss. And the value of building is to be increased by 50,000. Building is rupees 3 lakh and it is to be increased by. They are not telling that do it 50,000. They are telling that increase by 50,000. Increase up to 50,000 means take the difference, and increased by means you have to only add that. Value of machinery is decreased up to 80,000. Again up to 80,000, so we will take the difference of 1,20,000 and 80,000. Value of investment is to be reduced 30%. Provision for bad debt reserve 20%, discount reserve 5% is to be made on debtors. Stock value of 15,000 is to be reduced by 20%, not the whole stock. See, the whole stock, closing stock is 35,000, but we have to only reduce 15,000 stock by 20%. Amount of 20,000 is not paid to the creditors. 3,000 for outstanding expense, 2,000 for income receivable are not recorded in books, so they are unrecorded. From the above information, what we have to do? Write journal entries and also prepare revaluation. So I have not told you to tick this. As we have done in second chapter, we were ticking adjustment number 1, 2, 3. What is for that? Whenever you need to prepare any accounts. So here we need to prepare only revaluation account and journal entries. So first we will write the journal entries and we will prepare revaluation account on that basis. And after that, directly also how can we prepare the revaluation account, I will teach you. Okay? Yeah. So first we will prepare a format of journal entries. Question number 10. Journal entries in books of partnership form. Date, particulars, LF, debit, credit. Date is not required, directly you write 1, 2, 3 number. And journal entries are to be required for this adjustments only, okay? Not every other thing. Okay, for first adjustment. Value of land is increased up to 250. But we have to see, this chapter is for revaluating. So, writing the difference only. We don't write the new values in journal entries. We will write only the difference value, and we have to check whether it is increasing or decreasing. Okay, land is increased up to 2,50,000. Land was 1,80,000. Land is 2,50,000. So land is increasing. So we will write the entry for increasing land. Also, building is also there, and it is increasing by 50,000. So we can write this entry in two ways. Both are increasing, so a combined entry is possible. Or if you have to write the different entries for both, then also it is okay. See here, both are increasing, and if both assets are increasing, we are having profit. For profit, revaluation is credit and assets are to be debit. But if you don't understand, then you can write personal entry for that. Land to revaluation, building to revaluation. Or else if you know that both are increasing only, land debit, building debit to revaluation, we can write a combined entry also. But what to remember for this? Both are assets. Both are increasing. So we are getting profit. For profit, revaluation is credit and assets are debit. Land account debit, building account debit to revaluation. Friends, whenever the word up to is given, you take the difference. Whenever the word by is given, you directly write them. Land is increased up to 250. So please take the difference, write with pencil. 2,50,000 minus 1,80,000. Take the difference. So it will be 70,000. Then building is increased by. When the word by is given, then directly write the amount. Because building is 3 lakhs, we will increase the building by 50,000. But in land, what was the thing? Old value was 150, new value is 250, so increased amount is 70,000. And in building, directly they are telling that it is to be increased by 50,000, so our total profit will be 1,20,000. Narration is not required, okay? It was required in instance 11. Yes. Second, the value of machinery is to be decreased up to. So machinery is decreasing, asset is decreasing, so we are getting loss. Whenever we are getting loss, revaluation debit, machinery credit. You have to write the journal entry based on each adjustment, okay? So differently. So revaluation account debit to machinery account. Now as you know, up to word is given, so we will take the difference. So new value is 80 and old value is 120. So don't write the biggest value, the smallest value first. First write the biggest value. So 120 minus 80 will be 40,000. And if you are not writing this difference, then also it is not problem. This you have to just write with pencil. So the machinery was an asset, it is decreasing, so asset is decreasing, so it is loss. Loss means revaluation debit and credit machinery account. How much? When the word up to is given, take the difference 120 minus 80. Alright. The value of investments is to be reduced by 30%. Now investment, as you can see, it is our asset. Asset is decreasing, so again it is a loss. See, don't think that both are loss, so we can write combined entry. This we have written combined entry. The reason is that they are in a single adjustment, same adjustment. Now these both are in different adjustments, so write different entries for them. Okay. Now machinery investments are our assets. They are also decreasing. So again we are getting loss. Loss means revaluation debit. So entry would be revaluation account debit to investments account. Now again, what word they are using? Reduced by is to be reduced or reduced by 30%. So directly take the 30% of investments, 40,000 into 30%. 40,000 into 30%, so it will be 12,000. Fourth, provision for bad debt reserve 20%, discount reserve 5% is to be made on debtors. Now we have to make the provision on debtors for bad debts and discount reserve. Now as I said, whenever we have to make the provisions, they are our liability, unrecorded liability. So unrecorded liability we are getting loss, revaluation debit, and these reserves will be credit. So revaluation account debit to bad debt reserve account and to discount reserve account. Now friends, we need calculation for it. Okay. As we are doing in final accounts. Debtors are 50,000. Now as per the rule, first bad debts are not there. Then bad debt reserve, then discount reserve. So minus PDR 20%. 50,000's 20% is 10,000. Remaining will be 40,000. After that only discount reserve can be calculated. So minus discount reserve, and this will be 5%. So 5% of 40,000 will be 2,000. So remaining debtors will be 38,000. Okay, we need discount reserve and bad debt reserve. So debtors 50,000. First bad debts are there, but bad debts are not given in the sum. So as per the rule, directly bad debt reserve, 20% of 50,000 will be 10,000. So credit 10,000 for bad debt reserve. Then amount will be 40,000. Now 5% of it will be 2,000. So credit 2,000 for that. So total revaluation account debit with 12,000. Fifth one. The stock value of 15,000 is to be reduced by 20%. By means directly taken. Stock is an asset. Again it is decreasing. So we are getting loss. Loss means revaluation debit. So revaluation account debit to, here word closing stock is given in asset side, so we will also write to closing stock account. But how much stock of 50,000 by 20%? So 3,000. You should only know that whenever there is loss, debit revaluation. Whenever there is profit, credit revaluation. Okay. An amount of 20,000 is not to be paid to creditors. Write in bracket decrease. Why decrease? Because creditors were 1,70,000. Creditors are 1,70,000. 20,000 is not to be paid to them, so liability is decreasing. When liability is decreasing, we are getting profit. Profit means revaluation credit, creditors debit. Okay, creditors are our liability, they are not to be paid means they are decreasing. So when liability is decreasing, we are getting profit. Profit means revaluation credit and creditors debit. So creditors account debit to revaluation account 20,000. Seventh, an amount, 3,000 for outstanding expense, 2,000 for income receivable are not recorded in books. Both are unrecorded. So we have to decide they are unrecorded assets or unrecorded liability, or one is unrecorded asset and another is unrecorded liability. We have to check. Okay, outstanding expense are our unrecorded liability. So when an unrecorded liability is coming, we are getting loss. So revaluation debit, unrecorded liability credit. Income receivable. Receivables are our asset. So one is liability, one is asset. So combined entry is not possible. Two different entries are to be written. So first we are writing for outstanding expense, which is our unrecorded liability. So for unrecorded liability, we are getting loss. Loss means revaluation debit. So revaluation account debit to outstanding expense, and in bracket I will write unrecorded account credit 3,000. Then second entry for unrecorded asset. Unrecorded assets, we are getting profit. So for profit, revaluation is credit and assets are debit. Income receivable account, in bracket unrecorded asset debit to revaluation account. It is 2,000. Now friends, adjustments are over. Last entry is for profit and loss. So leave 5 lines. Leave 5 lines for them, because there are 3 partners and revaluation is to be debited and partners is to be credited, or partners are debited, revaluation credited. We need 5 lines. 4 lines are only required, but one line extra. So leave 5 lines and after that draw revaluation account. Unless and until we are drawing revaluation account, we cannot ascertain what is profit or loss. So revaluation account is required. Revaluation account. Particulars, writing bracket, as I said, losses, amount. Then particulars, writing bracket, profit, amount. Okay. So based on each entry we can post here. It is also possible. And as I said, in some of the sums, without making journal entries, we directly need revaluation account. That I am explaining afterwards. But now post this entry. Land building debit, revaluation credit. So on credit side, by land account in bracket increase, by building account in bracket increase, 70,000, 50,000. Revaluation debit, machinery credit. So debit side, to machinery account in bracket decrease, 40,000. Revaluation debit, investments credit, then debit side, to investments account in bracket decrease, 12,000. Revaluation debit, both are credit, so on debit side, to bad debt reserve account, to discount reserve account, 10,000, 2,000. Revaluation debit, closing stock credit. So again on debit side, to closing stock account in bracket decrease, 3,000. Creditors debit, revaluation credit. So on credit side, by creditors account in bracket decrease, 20. Because creditors have decreased, you should know, okay? These both were decreasing, that were increasing, that we should know from the adjustment itself. I am not making by myself. Revaluation debit, outstanding expense credit. To outstanding expense in bracket unrecorded, again 3,000. And income receivable credit, revaluation, income receivable debit, revaluation credit. So by income receivable in bracket unrecorded, 2,000. Now we have to check whether debit is more or credit is more. First, let me take the credit side. 70,000, 50,000, 20,000, 2,000. On credit side, it is 1,42,000. Debit side 40,000, 12,000, 10,000, 2,000, 3,000, 3,000. It is 70,000. So credit is more. 1,42,000. 1,42,000. Okay. 1,42,000 minus 40,000 minus 12,000 minus 10,000 minus 2,000 minus 3,000 minus 3,000. 72,000. What we will write here? To partners, here capital accounts are only given. So partners capital account in bracket we will write profit, and the old ratio. Starting in the question, old ratio is given 2:3:1. Name of partners: Rajesh, Pushpa, Pratibha. Rajesh, Pushpa, Pratibha. I have explained many times how to distribute the profit. So still, if people don't know, again you listen. Write 72,000 in your calculators. Make the total of this 2 plus 3, 5 plus 1, 6. So 72,000 divided by 6, multiply the first part 2 and equals to button. So 24,000. So for Rajesh it is 24,000. Now for the next part, don't multiply. Equals to part equals to next part 3 equals to 36,000. Equals to 1 equals to 12,000. Once more. 72,000 total divided by total parts 2 plus 3, 5 plus 1, 6. So divide by 6, multiply first part 2 equals to 24,000 equals to 3 equals to 36 equals to 1 equals to 12. So the sum is over. Now as I said, one entry is left that we will write. Now what entry is to be written? These partners are on debit side of revaluation. So revaluation account debit 2. Don't write partners, now write Rajesh capital account, Pushpa capital account, Pratibha capital account. Total is 72,000. Now for Rajesh 24, for Pushpa 36 and Pratibha 12,000. So all the journal entries and all the things are over. Now as I said, if there are no journal entries and directly you need to prepare this account, then also it is possible. We will refer all the adjustment one time. Without looking the journal entries also, we can directly prepare this. Let's start, my friends. First adjustment. The value of land is to be increased up to 2,50,000. Old value 180. New value 250, asset is increasing. Asset is increasing, that is our profit. Profit means revaluation credit by land account, difference 70,000. Building is to be increased by, directly they are telling increase this asset by 50,000. Again increase in asset, again profit, so credit side. Value of machinery is to be decreased up to 80,000. Machinery is the asset, it is decreasing. Now take the difference. Old value 120, new value 80, so decrease is 40. As machinery is asset, it is decreasing, we are getting loss. Loss means revaluation debit. Value of investment is to be reduced 30%. So investments were 40,000. They are reducing by 30%. So investments are asset, they are decreasing. So again loss, revaluation debit. 40,000, 30% is 12,000. Provision for bad debt reserve and discount reserve is to be kept. Again provision is like unrecorded liability. Unrecorded liability is loss, so revaluation debit, and the amount we have calculated. Stock value of 15,000 reduced by 20%. Stock is asset, it is reducing, we are incurring loss. Loss means revaluation debit. 15,000, 20%. Amount of 20,000 not paid to be creditors. Creditors are liability. 20,000 is not to be paid, so decreasing liability, so it is our profit. Profit means revaluation credit. 3,000 for outstanding expense. Outstanding expense is unrecorded liability. Unrecorded liability means loss. Loss means revaluation debit. And incomes receivable. Income receivable means it is unrecorded asset. Unrecorded asset means profit. Profit means revaluation credit. Now credit side total is more than debit side, so it is profit. So where this journal entry is required. But okay, as per the information of question, we will react. Okay, in this question and in exam also same question will be asked. Not this question, but same type of question will be asked, where you have to write the journal entries and you have to prepare a revaluation account. But sometimes without journal entries, only we have to prepare revaluation and balance sheet. That also is possible. We will see it tomorrow. So that's all. Thank you so much.